Welcome to the weekly wrap video. Just a couple of topics from the past 5 trading sessions to catch up on. First of all, over in the US, stock markets headed to the close on Friday in the green, with the S&P 500 having touched on an intraday record high earlier this week. And that's after the Fed Chairman Bernanke seeks to reassure investors and soothe markets that a tapering of their QE program is not tantamount to monetary tightening. It is in fact monetary easing, but at a slightly slower pace than previously. Markets have accepted this pretty favourably, with 10-year yields in the US falling below 2.5% as we're heading towards the close on Friday. So they look to reassure markets that the tapering of QE does not mean that the Federal Reserve are to hike rates any time in the near future, as it is said that any rise in rates would in fact tank the US economy. But elsewhere this week, US earnings season has continued, with the likes of Goldman Sachs, Citigroup, Bank of America and Morgan Stanley, to name just a few, who have really smashed EPS and revenue expectations, following on from JP Morgan and Wells Fargo some weeks ago now. But it does show a bit of corporate imbalance, as the tech sector is really not following suit after Google and Microsoft both heavily missed on their expectations, with Microsoft losing around $30 billion in market cap in early trade on Friday, as shares trade as much as 9.5% lower. That's after they missed on revenue and EPS expectations, blaming it on the PC market declining across the past few quarters. So we'll see how this bears for Apple, who are due to report next week, which will likely be the focus of the corporate calendar. But one more thing to cover this week: we did see China moving further towards interest rate liberalisation after removing the floor on bank lending rates. So this in itself is not actually an easing process, but does ease those burdens on the small and corporate SME lendings in the country, just one step closer to showing that China are looking towards market rates as the best form of equilibrium. So that's pretty much it from the past 5 trading sessions. I hope you've had a fantastic 5 trading days, but we'll see you again on Monday to cover all of next week's market action.